Taxable income is the portion of an individual's or entity's income that is subject to taxation by the government. It includes earnings from various sources, such as wages, business profits, investments, and other income types. To determine taxable income, you start with your total income and then subtract any allowable deductions, exemptions, or credits. These could include expenses related to work, retirement contributions, or certain personal expenses. Understanding taxable income is crucial for accurately filing taxes, as different types of income may be taxed differently, and there may be specific rules or rates that apply. For example, some income, like basic wages, may be fully taxable, while other types, such as certain investment gains, may be taxed at a lower rate or only partially taxed. Knowing what counts as taxable income and what deductions you can claim helps ensure that you pay the correct amount of tax and take advantage of any available tax benefits. Here's a detailed breakdown of taxable income types in Canada, including examples to help illustrate each category. 1. Wages and salaries, basic wages. These are the regular payments you receive from your employer for your work, typically based on an hourly, weekly, bi-weekly, or monthly basis. In Canada, this includes your gross pay before deductions like taxes or Canada Pension Plan, CPP contributions. Example, if you earn $50,000 annually from your job, this amount is your taxable income before any deductions. Bonuses. Additional payments given by employers, often as a reward for good performance, achieving certain targets, or during holidays. In Canada, bonuses are fully taxable and must be included in your annual income. Example, receiving a $5,000 year-end bonus would add to your taxable income. Commissions, earnings based on a percentage of sales or performance metrics. Common in sales positions, these are fully taxable in Canada. Example, a salesperson earning $10,000 in commissions in addition to their regular salary must report the total as taxable income. Overtime pay. Extra pay received for working beyond standard hours. This is also taxable in Canada. Example, if you work overtime and earn an extra $2,000 in a year, this amount is added to your taxable income. 2. Self-employment income. Business income. Profits earned from running your own business, calculated by subtracting all allowable business expenses from the gross revenue. This includes costs like supplies, rent, and advertising. Example, if you run a consulting business and earn $100,000 but have $40,000 in business expenses, your taxable income would be $60,000. Freelance income. Money earned from freelance work or gig jobs. This includes payments for services like writing, graphic design, or photography. Example, a freelance writer earning $30,000 in a year from various clients must report this as taxable income. Consulting fees. Payments received for providing professional advice or services on a temporary or project basis. Example, a consultant earning $20,000 for a project must include this amount in their taxable income. 3. Investment income, interest. Earnings from savings accounts, bonds, and other interest-bearing investments are fully taxable in Canada. Example, earning $500 in interest from a savings account must be reported as taxable income. Dividends, payments made by corporations to shareholders from their profits. In Canada, dividends are eligible for a dividend tax credit, which can reduce the overall tax burden. Example, if you receive $1,000 in dividends, you must report it, but the tax credit may reduce the amount of tax owed. Capital gains. Profit from selling an asset like stocks or real estate. In Canada, only 50% of the capital gain is taxable. Example, if you sell stocks for a profit of $10,000, only $5,000 is considered taxable income. 4. Rental income. Property rentals. Income earned from renting out residential or commercial properties. In Canada, you can deduct expenses like mortgage interest, property taxes, and maintenance costs. Example, renting out an apartment for $12,000 a year with $4,000 in expenses results in $8,000 of taxable rental income. Equipment rentals. income from renting out items like tools, machinery, or vehicles. Example, renting out a piece of equipment for $2,000 annually would be considered taxable income. 5. Retirement income, pension payments, payments received from pension plans, which are generally taxable in Canada. Example, if you receive $20,000 a year from a pension, this amount is included in your taxable income. Distributions from retirement accounts. Withdrawals from registered retirement savings plans, RRSPs, or similar accounts are fully taxable. Example, withdrawing $10,000 from your RRSP will be included in your taxable income. Canada Pension Plan CPP and Old Age Security OAS benefits. These government-provided benefits may be taxable depending on your total income. Example, if you receive $6,000 from CPP and $8,000 from OAS, these amounts may be partially taxable based on your overall income. 6. Other income sources. Alimony. Payments received from a former spouse as part of a divorce agreement. In Canada, alimony is generally taxable to the recipient. Example, receiving $12,000 in alimony payments must be reported as taxable income. Unemployment benefits, payments received from employment insurance EI when unemployed. These benefits are taxable. Example, receiving $8,000 in EI benefits should be included in your taxable income. Scholarships and fellowships. Generally, scholarships and bursaries are not taxable if they are for tuition or related expenses, but amounts used for other purposes may be taxable. Example, a $5,000 scholarship used for living expenses might be considered taxable income. Lottery and gambling winnings. In Canada, lottery winnings are typically not taxable. However, income earned from investing these winnings is taxable. Example, winning $100,000 in a lottery is tax-free, but any interest or dividends earned from investing this money are taxable. Forgiven debt. If a debt you owe is forgiven or canceled, the amount that was forgiven may be considered taxable income, though this is less common. Example, if $10,000 of a personal loan is forgiven, this amount may need to be reported as income, depending on the circumstances. Understanding these categories helps ensure compliance with Canadian tax laws and can assist in maximizing deductions and credits, thereby potentially reducing the overall tax burden. It's crucial to keep detailed records and consult with tax professionals if needed. Here's a detailed breakdown of taxable income types according to UK jurisdiction, including examples. 1. Employment income. Basic salary. This is the regular income you receive from your employer for your work. In the UK, this includes gross pay before any deductions for taxes, national insurance contributions, or pension schemes. Example, if your annual salary is £30,000, this amount is considered taxable income before deductions. Bonuses. Additional payments made by employers, often based on performance or achieving specific targets. These are fully taxable. Example, receiving a £2,000 bonus at the end of the year would be added to your taxable income. Commissions. Payments received based on a percentage of sales or performance metrics. These are common in sales roles and are fully taxable. Example, a sales executive earning £5,000 in commissions in addition to their salary must include this in their taxable income. Overtime pay. Extra payments received for working beyond standard hours. This is also taxable in the UK. Example, if you earn £1,000 from overtime work, this amount is added to your taxable income. 2. Self-employment income. Business income. Profits earned from running your own business, calculated by subtracting all allowable business expenses from the gross revenue. Example, a sole trader earns £50,000 in a year and has £20,000 in business expenses. The taxable income would be £30,000. Freelance income, money earned from freelance work or gig jobs such as consultancy, creative work, or other services. Example, A freelance designer earning £25,000 in a year must report this as taxable income. Consulting fees, payments received for providing professional advice or services on a temporary or project basis. Example, a consultant earning £15,000 for a short-term project must include this amount in their taxable income. 3. Investment income, interest, earnings from savings accounts, bonds, and other interest-bearing investments. Interest is taxable in the UK, but there is a personal savings allowance that can reduce the taxable amount. Example, if you earn £300 in interest from a savings account, depending on your tax band, part or all of it may be tax-free due to the personal savings allowance. Dividends, payments made by corporations to shareholders from their profits. In the UK, there's a dividend allowance that allows a certain amount of dividend income to be received tax-free. Example, if you receive £2,000 in dividends, you may be entitled to a tax-free allowance, and any amount over this would be taxed according to the dividend tax rates. Capital gains, profit from selling assets like stocks, bonds, or property other than your main residence. In the UK, there is a capital gains tax allowance, which means only gains above a certain threshold are taxable. Example, selling shares with a gain of £10,000, and if the capital gains tax allowance is £12,300, no tax would be due. 4. Rental income, property rentals. Income from renting out residential or commercial properties. In the UK, expenses like mortgage interest, repairs, and maintenance can be deducted from rental income. Example, renting out a flat for £12,000 a year with £4,000 in allowable expenses results in £8,000 of taxable rental income. Equipment rentals, income from renting out items like machinery or vehicles. Example, if you rent out equipment for £3,000 annually, this amount is taxable after deducting any related expenses. 5. Pension and retirement income. State pension. The government-provided pension that you receive when you reach state pension age. It is taxable. Example, receiving a state pension of £9,000 a year must be reported as taxable income. Private pension payments. Income from private or workplace pensions. In the UK, 25% of the pension pot can often be taken tax-free, but the rest is taxable. Example, if you receive £15,000 annually from a private pension, after the tax-free portion, the rest is taxable. Personal pensions and annuities, regular payments from personal pension plans or annuities, these are generally taxable. Example, an annuity providing £5,000 a year would be included in your taxable income. 6. Other income sources. Alimony, maintenance payments. In the UK, maintenance payments are typically not taxable for the recipient and are not tax-deductible for the payer. Example, if you receive £6,000 in maintenance payments, this amount is generally not considered taxable income. Unemployment benefits. Job seekers' allowance and other benefits are typically not taxable. Example, receiving £3,000 in job seekers' allowance does not need to be included as taxable income. Scholarships and fellowships. Generally, scholarships and bursaries are not taxable if they are for tuition fees or course-related costs. Example, a £10,000 scholarship used for tuition is not taxable, but if used for living expenses, it may be considered taxable. Lottery and gambling winnings. In the UK, lottery and gambling winnings are not taxable. However, any income generated from these winnings, such as interest, is taxable. Example, winning £100,000 from the lottery is tax-free, but earning £1,000 in interest from investing these winnings would be taxable. Gifts and inheritances. Generally, gifts are not taxable, but there may be inheritance tax implications for large estates. Example, receiving a gift of £5,000 from a family member is not taxable, but receiving a large inheritance may be subject to inheritance tax if the estate exceeds the threshold. These categories of taxable income help determine the total amount you owe in taxes each year. It's important to understand the specific tax rules and allowances in the UK and consider consulting with a tax professional for complex situations. Here's a detailed breakdown of taxable income types according to U.S. tax jurisdiction, along with examples. 1. Wages and salaries. Basic wages. The regular pay you receive from your employer for your work, before any deductions like federal and state taxes, Social Security, or Medicare contributions. Example, if your annual salary is $60,000, this amount is your gross income before any deductions. Bonuses. Additional payments made by employers, often based on performance or specific achievements. These are fully taxable. Example, receiving a $5,000 performance bonus adds to your taxable income. Commissions. Payments based on a percentage of sales or performance. This type of income is common in sales positions and is fully taxable. Example, a salesperson earning $15,000 in commissions in addition to their base salary must report this as taxable income. Overtime pay. Extra pay received for working beyond standard hours, which is also taxable. Example, earning $2,000 in overtime pay increases your taxable income. 2. Self-employment income, business income. Profits earned from running your own business, calculated by subtracting all allowable business expenses from the gross revenue. Example, if a sole proprietor earns $80,000 in a year and has $30,000 in business expenses, the taxable income would be $50,000. Freelance income. Money earned from freelance work, such as writing, graphic design, or other contract services. Example, a freelance photographer earning $40,000 must report this income, deducting any related expenses. Consulting fees. Payments received for providing professional advice or services on a temporary or project basis. Example, a consultant earning $20,000 from a project would include this amount in their taxable income. 3. Investment income. Earnings from savings accounts, bonds, or other interest-bearing investments. This income is fully taxable. Example, earning $600 in interest from a savings account must be reported as income. Dividends. Payments made by corporations to shareholders from their profits. In the U.S., dividends can be classified as either ordinary or qualified, with different tax rates applying to each. Example, if you receive $1,000 in dividends, the tax rate depends on whether they are ordinary, taxed at your regular income tax rate, or qualified, potentially taxed at lower capital gains rates. Capital gains, the profit from selling assets like stocks, bonds, or real estate. In the U.S., capital gains are categorized as either short-term, held for 1 year or less, or long-term, held for more than a year, with long-term gains generally taxed at a lower rate. Example, selling stocks with a gain of $5,000 held for over a year results in a long-term capital gain, which might be taxed at a lower rate than ordinary income. 4. Rental income. Property rentals. Income from renting out residential or commercial properties. You can deduct expenses such as mortgage interest, property taxes, and maintenance from this income. Example, if you earn $20,000 in rental income but have $8,000 in deductible expenses, your taxable rental income would be $12,000. Equipment rentals. Income from renting out equipment like machinery or vehicles. Example, renting out a piece of equipment for $3,000 annually is considered taxable income after deducting any related expenses. 5. Retirement income. Pension payments. Regular payments received from pension plans, which are generally taxable. Example, receiving $25,000 annually from a pension plan must be reported as taxable income. Distributions from retirement accounts. Withdrawals from retirement accounts like 401ks or IRAs are taxable. Example, withdrawing $10,000 from a traditional IRA will be included in your taxable income. Social Security benefits. Depending on your overall income, a portion of your Social Security benefits may be taxable. Example, If your total income exceeds certain thresholds, up to 85% of your Social Security benefits may be taxable. 6. Other income sources. Alimony. For divorces finalized before January 1st, 2019, alimony is taxable to the recipient and deductible for the payer. For divorces finalized after this date, alimony is neither taxable nor deductible. Example: receiving $12,000 in alimony from a divorce finalized before 2019 must be reported as taxable income. Unemployment benefits. Payments received from unemployment compensation are fully taxable. Example: receiving $6,000 in unemployment benefits must be included in your taxable income. Scholarships and fellowships, amounts used for tuition, fees, books, and supplies are generally not taxable, but amounts used for other expenses, such as room and board, are taxable. Example: a $15,000 scholarship with $5,000 used for room and board would make that portion taxable. Lottery and gambling winnings. In the U.S., all lottery and gambling winnings are taxable and must be reported. Example: winning $20,000 in a casino must be reported as taxable income, and you can also deduct gambling losses up to the amount of your winnings. Forgiven debt. If a debt you owe is canceled or forgiven, the amount that was forgiven is generally considered taxable income. Example: if $10,000 of your student loans are forgiven, you must include this amount as taxable income. Understanding these categories helps ensure accurate tax reporting and compliance with U.S. tax laws. It's often advisable to consult with a tax professional, especially if you have complex financial situations. Here's the detailed breakdown of taxable income types according to Australian tax jurisdiction, with amounts denoted in dollars. 1. Employment income. Basic salary and wages. The regular payments you receive from your employer for your work before any deductions such as tax withheld, PAYG, superannuation contributions, or other deductions. Example: if your annual salary is $70,000, this amount is considered your gross income before tax and other deductions. Bonuses and allowances, additional payments or benefits provided by employers which are fully taxable. These can include performance bonuses, travel allowances, and other financial incentives. Example: receiving a $5,000 bonus adds to your taxable income. Overtime and shift loadings, extra payments for working beyond standard hours or during irregular shifts. These payments are also taxable. Example: earning $2,000 in overtime pay is added to your taxable income. 2. Self-employment and business income. Business income, profits earned from operating a business. This is calculated by subtracting all allowable business expenses from the total revenue. Example: if a sole trader earns $100,000 in a year and has $40,000 in business expenses, the taxable income would be $60,000. Freelance and contract income. Earnings from freelance work or contracts, such as consulting, creative projects, or other services. All income from such work is taxable. Example: a freelance writer earning $30,000 must report this income minus any deductible expenses as taxable income. 3. Investment income. Interest. Earnings from savings accounts, term deposits, and other interest-bearing investments. This income is fully taxable. Example: if you earn $500 in interest from a bank account, this must be reported as income. Dividends. Payments made by companies to shareholders from their profits. In Australia, franking credits, imputation credits, can offset tax liabilities on dividend income depending on the shareholder's tax situation. Example: receiving $2,000 in dividends may come with franking credits, which can reduce the overall tax payable. Capital gains. Profits from selling assets like stocks, property, or other investments. In Australia, a discount on capital gains tax is available if the asset is held for more than 12 months. Example: selling shares for a gain of $10,000 with a 50% discount applied means $5,000 is subject to capital gains tax. NAR 4, Rencome, property rentals, income from renting out residential or commercial properties. In Australia, you can deduct expenses such as mortgage interest, property management fees, and repairs. Example, renting out a house for $20,000 a year with $8,000 in deductible expenses results in $12,000 of taxable rental income. Equipment rentals, income from renting out items like machinery, tools, or vehicles. Example, if you earn $3,000 from renting out equipment, this amount is considered taxable income after deducting any related expenses. 5. Retirement and superannuation income. Superannuation payments, withdrawals from superannuation funds, including lump sums and pension payments. In Australia, the tax treatment of superannuation withdrawals depends on your age and the components of your superannuation balance: taxable, tax-free, or untaxed elements. Example, if you withdraw $30,000 from your superannuation fund and you're over the preservation age, this may be tax-free up to a certain limit, but excess amounts may be taxed. Age pension and other government pensions. These are generally taxable, depending on the total income and other factors. Example, receiving $15,000 annually from the age pension is included in taxable income, but there may be tax offsets available. 6. Other income sources. Alimony and child support. In Australia, alimony, spousal maintenance, is generally not taxable, and child support payments are neither taxable nor tax deductible. Example, receiving $10,000 in spousal maintenance is not included in your taxable income. Unemployment benefits, payments like job seeker payment, are taxable. Example, receiving $10,000 in job seeker payment must be included as taxable income. Scholarships and fellowships. Typically, scholarships and bursaries are not taxable if they are for education expenses, such as tuition fees, but stipends for living expenses may be taxable. Example, a scholarship covering $20,000 in tuition fees is not taxable, but $5,000 provided for living expenses might be taxable. Lottery and gambling winnings. In Australia, lottery and gambling winnings are not taxable. However, any income earned from investing these winnings is taxable. Example, winning $100,000 in a lottery is tax-free, but earning $2,000 in interest from investing these winnings would be taxable. Forgiven debt. In certain cases, forgiven or canceled debt may be considered taxable income, although this is not common in personal tax situations. Example, if $5,000 of a personal loan is forgiven, it may need to be reported as income, depending on the circumstances. Understanding these categories helps ensure accurate tax reporting and compliance with Australian tax laws. Consulting with a tax professional is advisable, especially in complex financial situations. Taxable income is the portion of an individual's or entity's income that is subject to taxation by the government. It includes earnings from various sources, such as wages, business profits, investments, and other income types. To determine taxable income, you start with your total income and then subtract any allowable deductions, exemptions, or credits. These could include expenses related to work, retirement contributions, or certain personal expenses. Understanding taxable income is crucial for accurately filing taxes, as different types of income may be taxed differently, and there may be specific rules or rates that apply. For example, some income, like basic